really that bullish on something that I need to pay market price. Market price. You know, humorously, what is market price? Well, humorously, a young lady that I was friends with, she would always, we were good friends, we'd take each other out to dinner every now and again. We would say, hey, listen, she would always order something on the menu when it was my turn. She would order something on the menu that said market price. Well, you don't know what price that is, okay? A market price is also called low-hanging fruit for the market maker or for the specialist, okay? They can fill you at whatever price you want. Now, that's done by ma-and-pa investor. In fact, it's called the first hour of trading. We have a lot of market orders because the uneducated or sometimes the investors who may be new to the business, they would place a market order, which means fill me at whatever price you want. I don't care. That's not how I trade. I say, hey, I want to, it's very logical. If you've been listening, it's very logical. I want to get in here, I want to get out here, and that's about it. So I want to place this trade as a limit order to get in at $3.80. That's about it. Be careful of the first hour of trading. It's been said that amateurs open the market and professionals close the market. All right? So amateurs are opening, they place their trades after market hours, and then professionals go ahead and close the market. All right? So then we've placed our order, buy to open, a limit of $3.80. Monitor your position. How often should you monitor your position? At least do a daily price check. That's it. I want you to keep in touch. You know, you shower every day, hopefully, maybe not, I don't know, but whatever you do, I want you to check your stock every day. Why? You're beginning with the end in mind. Fast forward this, 10 years from now. I don't care where you're at, you won't be working, right? You'll be maybe a big philanthropist, maybe you'll be helping out kids or whatever you want to do. Maybe you'll do what I like to do. I like to help others learn how money works. That's what I like to do, okay? Whatever you want to do is you'll still need to keep in touch with your investments, not full time, maybe not every hour of every day, but touch base with them. You're welcome to actually, even though it's an online broker, you're welcome to call them up. All right? Chances are, like me, you'll get to maybe some of those advanced levels, and you'll get even, red carpet treatment. Oh, Mr. Drew, you're in our platinum signature services. That's what Schwab has. Or you're Ameritrade Apex. Okay, fine. Well, what can we do here for you today? You're one of our best clients. Oh, well, hey, I'm on the cell phone, whatever. Hey, I'm just interested. How my position's doing? Do I have heavy volume on my stock traded? Oh, it's average. Okay, great. Well, I'm still profitable. Great. What's my GTC at? It's at 5. Okay. Well, move it for me, will you? He'll move it for you, no charge. You know what I mean? I mean, just you're welcome to call him. If you're living your life on the way home from work, you're welcome to do some of this. Keep in touch with your positions, okay? Sell when the target price is hit. That's kind of goes without explanation there. Sell when the target price is hit. Sell on or before expiration date. You must sell on or before expiration date unless you have usually a previously signed agreement with your broker. Unless they say that they'll do it for you, that option must be sold prior to expiration. Even though it may be worth money, if something's not done with it, either it's not exercised or auto-executed, all right, it can very well expire worthless. So make sure that you have an agreement. You know what your broker will do. You know what you will do. You need to pay attention. Sell on the first sign of weakness or the peak in MACD, and sell half when you double your money. Now, you can sell on any one of these, okay? If you'll see here, monitor your trade. You can sell on any one of these. Sell when your target price is hit. Sell when the first sign of weakness. Sell when you double your money. That said, I know this may sound a bit unique to you right now, but if you always sell when you double your money, you'll always have a free trade. Is that right? You'll be on the house's money. That's very good. Sometimes, though, you're actually selling too soon. I've been in trades that have gone fantastically, and they're so well that I've sold half my money, or I've sold half my position, and yet the stock or the option has gone on for excessive profits. That, my friends, that's just over time. All right? These are the disciplines to understand really the feeling that happens. That's going to come with experience. It's difficult for me to teach that. All right? That's going to come with experience. It's like teaching how to throw a slider. All right? When you teach how to throw, it's very difficult to learn that from a book. Okay? You got to kind of feel that. That kind of happens over time a little bit. Sell when you hit your stop loss price. Unemotionally, boom, you're gone. You're going to sell when the stock hits your stop loss price. So now that we understand what happened, let's see what happened with our trade. Come on with me. Well, we bought, let me go over here. Let me go back to that. Hold on. There we go. Take a look right over here. That was our green. That was our bounce off the moving average. That was our green. That was our MACD. That was our stochastic phantom green. Now, let's see what happened. The stock bounced past our goal 35. Yet, then we see that the MACDs are starting to turn over a little bit. We see that the The stock's starting to turn over. We see that the MACDs are starting to turn over, and we see that the stochastics are starting to turn over. Your job in this business is to do one thing only, make a profit. Well, in this circumstance, let's evaluate our option to find out how much it is worth. Well, go over here, sell. I hope that's clear. Here, let me do that again. There we go. Sell, all right? That's what we do. We see that the stock is kind of turning over a little bit. Sell. Let's go to our broker. Let's go to the website and find out what would that option be worth. We bought it for $3.80, all right? That's the $35 option. We see, let's scroll over here. There we go. We see that it's going down 91 cents that day. Go over here to the November option. We see that's November $30 option. The bid is $5.80. So let's read. We have the November $30 call was purchased for $3.80. The November $30 call sold for $5.80. So far, so good. That means we made a profit of only $2, but on our capital invested, that was a 58% return in 14 days. Now, gentlemen, how many of you guys believe that a 58% return in 14 days is pretty darn good? There you go. That's not bad, right? If you could do that every 14 days, would you be in a less cranky mood? Yes or no? Yeah, I've met you this morning. Some of you guys aren't awake yet. I understand that. That's no big deal, all right? Okay? Yeah, so that's the goal, all right? What would happen if that $3.80 option ever went to $1.90? Unemotionally, boom, you're gone. In this circumstance, now we have a little bit more capital to deal with. Let's get better. Let's learn more about option trading and do it again, all right? We profit of $2 for 58% in 14 days. Great job. That's a great trade. So again, patience is a virtue. Follow the 8-step process. If you do not follow the 8-step process, you email me. You know what I'll do is I'll go right back to the 8-step process and I'll find out where you went wrong. Now, very possibly, chances are 90% of the time, it's going to be in there. One of those steps, you had a gut feel and you didn't follow our system. Every now and again, you're going to lose money. Why? The market. You woke up that morning, the market said, I'm going to take your money. And that's the way it is. That happens. It's okay. All right? Now, you're in it for the long haul. You'll lose money every now and again. It's the way it is. If you think you're going to get in this business and every single ball that you're going to hit is going to go out of the park, that's not reality. That's not what was sold to you because it's not reality. We're going to say you can do very, very well. We just need a little bit of sweat and a little bit of desire, a little bit of effort, and you can come with us. Look for volatile stocks. Why are you going to want to look for volatile stocks? Why? Well, simply, they have the ability to move. If you were to go ahead and buy an option on a stock that does this, just flat, first of all, the option is not going to be worth a whole lot of money. Why? Because the stock doesn't do anything. The stock doesn't have the ability to, it's just a flat insurance company or a bank or something. It just doesn't do a whole lot. All right? So I'm going to be able to be comfortable with more and more volatile movements because I now have a higher level of education. All right? You do too, through our classes. Choose stock with strong fundamentals with call options. Now, why? Michael, some of you will email me and say, hey, I really like this stuff. I think this kind of makes some sense. I'm going to become an option trader. Well, why don't I just pay attention to the green and red arrows? Why do I care about the stock's fundamentals? Well, here's why. If let's say on a trade, you have some bad economic news. That's very possible, right? They come out at usually 8:30 a.m. Eastern time or maybe 10 a.m. depending on the report. Alan Greenspan talks, and we hear about his speeches usually 2:15 Eastern Standard Time. Well, what happens if all of a sudden there's some bearish news and the whole market starts going down? Well, if you have a call option on a stock with good fundamentals and the stock's a solid stock, it will go down slower. If you have an option on a stock with poor fundamentals and it's, they're losing money and, it just, poor fundamentals for whatever reason, that stock will drop a lot faster, okay? So ideally, we're going to stay in stocks that have good fundamentals, good market guide, Zacks, etc. Chart the stock's trading pattern to determine the strike price and the expiration month. I've gone over that. Remember, the bounces from home to where they stop going up. From the 30-day moving average home to where they stop going up on an uptrending stock. Now that said, fast forward this conversation maybe a few years from now, and we're going to be in a downtrending market. Not if, but when. And then it's going to be 30-day moving average down to where it stops going down. 30-day moving average to where it stops going down. And friends, understand this, I just did this same identical thing. My trade entry, let's see, let me get the dates here. It was 20 days ago on a trade that stock hit its head on the 30-day moving average. Let's see, 60 down to 50. It was about a 270% gain on an option. Doesn't happen all the time, but I'm following the same system, all right? I'm doing the same things, and if you get into the right stock at the right time, wow, you can really do well. You can really take care of your family. All right? Get out if you're wrong. If you're wrong non-emotionally, you're wrong. I've been wrong before. You know, reminds me of, you know, has anybody ever talked on your phone, your cell phone while you're driving, and you've been wrong? You've cut somebody off, or you've done something, and you look like the problem maker there. You know, you're wrong. You don't give this gentleman or the person, you apologize, whatever. You're wrong, okay? I've been wrong. That's happened to me recently. I felt very embarrassed. I'm not that important that I can cut you off. That's rude. I was wrong, okay? Sometimes you're going to be wrong. Use stops. A minimum of 50% of the purchase price is a fantastic place to place your stops, okay? That's where we go ahead. We cut. We're done. 50%. So now let's review. What we've done initially is we've talked to you about the 8-step process as far as calls are concerned. Now that we've laid the foundation, it's going to be very, very similar for puts. We're then going to be moving into our covered calls. We're going to be talking about stock splits. We're going to be talking about leaps. We're also going to be talking about exchange-traded funds. The basis for everything we're going to do all day, the rest of the day, including your coaching, is going to be the 8-step process. Now that we've described that, we're going to move actually a little bit quicker on the puts, go into everything else here we have here today. Look forward to it, and we'll be back.